Tesla Q3 earnings, all the steak, but no sizzle, is our analysis for today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Your support allows the channel to exist and is greatly appreciated. And please join us if you'd like daily shows that enable you to help gather a good command of where the market is and going so that you can invest and trade better. We also want to note this is a copyrighted broadcast. Any use or reproduction of anything said here is prohibited without written permission. So, obviously, you know, today is the big day for Tesla on earnings. We're in kind of a similar mode to what we've started experiencing on a quarterly basis since we entered the S&P, which is instead of blowout earnings and revenue boosting our stock price, we're actually finding that typically Tesla is down. And you know, the question is, why is that occurring? And then what can we expect going forward? So my analysis of all of this is the fact that we actually covered the fact this week that we're in a sort of a tough position with Tesla. The reason is that usually the run-ups for the quarter delay until after the news. What ended up happening this quarter is that there was a delay after the production number announcement before the stock price started to move, and then we had this nice 100-point run prior to the announcement of earnings. So basically we ended up in this, I want to say, tough position where most of the reasons why people would upgrade the stock is baked into the numbers that were sort of implied already by the production numbers. So everyone sort of got in prior to earnings because they already had a good idea of all the drivers and what the profit and revenue might look like. So this is why we mentioned to you that we're likely to see a sideways to down after earnings, but then we wait on our 3-day rule turning into a 10-day rule to really get a good feel for what the marketplace is saying in terms of the large analysts and their analysis of what these numbers look like. So generally, as you probably already know, margins were 28.9%. We ended up with $13.5 billion in revenue. You know, the margins were higher than market was expecting. Both profit and revenue beat the targets that had been set by Wall Street. So in general, it's sort of the same old story from Tesla. Continues to beat. They're beating based on the fact that they're increasing production before the arrival of the new factories. And I was kind of impressed. One of the people I keep an eye on is Mr. Munster from Loop Capital. And he threw out some monster numbers. And the best one that I thought I heard from him was that as Tesla does its thing in terms of factory and automation, them pushing for that 40% margin target would actually put them in a competitive to Apple circumstance where the valuation of $2,500 per share in the next 3 or 4 years is justified. All this driven by the increasing revenue / also increasing profit margin. So I think that in my comments lurks the reason why the stock is relatively tepid now, and I think tepid until the analysts come out with a full review of everything that was said, and then we start seeing how they impact things going forward. So I would have to say then that there's something called a whisper number on Wall Street, which is, hey, we know you're going to deliver X number, but if you deliver the whisper number, that's when we'll be blown away in the short term. And so clearly we did not achieve that, even though the numbers were excellent. So the thing I'm, I guess, confused by is there's this giant elephant in the room that seems to not be able to be satiated, and that is, uh, excuse me, Mr. Musk, when do these two new factories start producing? Because we all know once they do start producing, uh, Tesla's going to run to the moon because of confirm what's going to happen. Is it the truth that we now have the problem of the chips are finally hitting Tesla hard and these things won't open for another quarter basically? You know, what's going to really happen here? Because that's where the sizzle is that would sizzle this steak nicely, if you will. So I think the answer from what Elon said ends up being start of production in Berlin towards the end of the year. But, you know, that's unfortunate, I think, because that was part of the sizzle that was supposed to start now so we can get that extra production in and push over the million vehicles sold for the year plan. And so that seems to have jumped out the window. So now we're in that, you know, well done, well cooked steak, but not a lot of sizzle going with that steak, and therefore you don't have the nice push right away that you might in the stock. So my overall view of this thing is that we're in a paradise for longs and longs that are large firms. We're in a somewhat happy space for the hedge fund community. But, you know, I also don't want to get into the gloating, but you'll note that I pointed out that 2 or 3% of your portfolio covered with puts, not a bad deal. Stock price dips, you get paid, and you're already long, so, and you're happy with owning the stock. So a little pullback is actually fairly profitable for you. So I think that, you know, that's the general analysis of where we are, lack of sizzle. Another thing I wanted to bring up, it was brought up that Tesla at 900 hit a double top. I'm not a chartist, but I'm told that it's a bearish signal that you're getting a double top. And Tesla's obviously pulled back from that 900 back down into the 850 range, which I was surprised by to some extent. But I did point out that, you know, the stock was heading to full valuation prior to earnings. And so it can be very hard without powerful upgrades and therefore companies diving in to get that heavy movement without the support of the heavyweights at the big firms having a green light to start buying in large amounts from their analysts. So we'll see, you know, how this plays out. But I just think that, you know, if anything suggests that production will start at scale at the two factories coming, we have a really exciting acceleration. But even if it isn't announced now, we do know it's coming and we can see what the trend is. I also want to point out, we actually did another show today, and one of the things I was talking about is that Elon is kind of a shabby chic type of person, because he definitely wants the company to grow, he wants to do well, but he's got to find out how to go a little bit shabby to save money and therefore have a great company that's running without being affected by sort of overspending in the wrong places. So very lean operations, and the goal allowing as much profit as possible to fall to the bottom line, and then that influencing stock price, and all the stakeholders on that side are satiated with this as well. So, you know, we're going to get a chance to dive into the numbers a little bit and also see, you know, kind of what next for Tesla, and then go from there. But I'd have to say everything in my mind looks quite good. There's a very consistent management plan and an execution of that management plan, and increasing profit margins, profitability, you know, technology leadership. All of this is, you know, great stuff. The one surprising data point I heard today, and it wasn't in the record, was that the VW CEO invited Elon onto a conference call with his management team. And one of the things that came up was that with Tesla's new processes, they're able to deliver in 10 hours a vehicle, where evidently VW delivers in 20, each vehicle coming off the line. So this is kind of big because what it's highlighting is as large competitors start to come after Tesla, they're going to have to deal with a company that has excellent operating fundamentals, which will lead to new entrants having to be very well organized in order to be competitive. So, another example of the excellent fundamentals that Tesla is displaying, and particularly where we're headed, which is a well-run company that's still profitable once we get into sort of the next rounds of the battle that will emerge. I have to say there's this lurking thing that I keep thinking about that's fascinating, which is the collective ICE community had a decision that Bob Lutz kind of got into a little bit, which was that when vehicle production is optimized by 25% vertical integration and then outsourcing, the whole idea of the battery stuff, factories being owned by the manufacturer, was deemed to be superfluous, in fact risky, because commitment of capital to that space might jeopardize the future of the company because of capital allocation wrong, too many places, and therefore you run out of cash to some extent to concentrate it where it needs to be. And Elon started building and built the Gigafactory and is now in process of doing more of it. And it's fascinating to watch the world's best makers of cars having done a misstep when it comes to the supply chain in this way. And now they're having problems because the solving of the supply chain problem is not an instant solution, and therefore they're at a competitive disadvantage to Tesla as all of this fleshes out. And then you add into the fact that there are multiple battery chemistries that are emerging, and people are going to have to choose which one they're going to do and figure out how to do it at scale, even when supplies in the space are tight. So this, I think, adds to the Tesla miracle, because you end up with years in advance of vertically integrated production that's hard to replicate in a short period of time, because you can't just walk into the marketplace and buy it. I have a friend who is a senior manager at one. They supply lithium to Tesla, and they were saying that the problem they're having is that they're fully tapped out. They have to open up new mines, which takes a lot longer than simply increasing the amount that you pull from that mountain. And so literally the supply chain squeeze is giving Tesla a competitive advantage. And then it's also interesting because Tesla's sales are so strong in the space, you now have the additional problem of, wait a second, you guys want to come after us, and that makes sense, but it can take 7 years to get a mine fully running to generate the raw materials necessary for you guys to produce. And if you did this early in terms of buying and setting up, and there's no car sales to go with it, you're kind of screwed there too, because, hey, you have all this capacity and you don't have sales to support all the costs that were related to it. And then finally, as we all know, one of the problems ICE is having is that there's dual R&D. They both have to do research and spend on research as ICE closes out, while at the same time they have to spend on electric coming up. And that's a drain on resources as well, making them not as strategically focused, and they have to spread their capital carefully on a strategic basis. So I just wanted to review in general our take on what we're seeing from the numbers. I believe that we're within 5% of expectation based on the process that we work with to generating revenue profit numbers. But as you can see, all the expectations are covered, and that side of the house is well done, which is why the stock isn't falling dramatically. But the other half of the house, which includes dramatic growth over the next 3 to 6 months, is what we're waiting for to come out as a process from the factories, the new factories, and therefore I think that's where the sizzle is. So at any rate, we plan on doing more on this. We appreciate you taking time to join us. This is Greg for Teslafaninsight. trying to speak up while on the road so we can get you better sound. And we really appreciate your taking time out to join us. Please remember we have some SpaceX shares. We also wanted to encourage you to remember, don't go to bed within 2 hours of eating, minimum 4, ideally, to let the food digest before you go to bed, lowering the chance of other health issues emerging from that. Once again, Tschüss German, au revoir French, Lehitro, Hebrew, Choda, Hafez, Farsi, Starasic, Russian, Ni hao ma, Chinese, Konbanwa, Japanese, Hey do, Swedish, good day. And in Jamaica we say, Nuff respect, walk good man. Thanks for joining us. Have a great day, and bye for now.